So next program is money management is a skill or a art. Actually, நாங்கள் காலேஜ் படிக்கும்போது சொல்லுவோம் எக்கனாமிக்ஸ் இஸ் a skill or artனு ஒரு கொஸ்டின் வரும். So இது money management skill or art by Mr. Thirumala Rao, Zonal Head South DSPMF. He has over 24 years of experience. His previous stints were in ABS, Aditya Birla Mutual Fund, ICICI Bank, Heritage Foods. He believes in the power of consistency, commitment and discipline in both health and wealth, and is an ultra marathon runner. He has completed a lot of marathons in 2024. Over to you, Mr. Rao.
I was coming in the Indigo flight. I saw this message. Have you ever seen this message? What it is there? Flying is a serious profession. It is quite relevant to our money management also. Money management is also serious profession. Don't carry your emotions while investing or suggesting. Agree or not? Because you are a pilot, I am a passenger. I always look at you, if your skill is good, if you are good at managing the flight management, and it will be very confident I will get it. Agree or not? If I feel that you don't have that skill, what will happen? You will be scared. So that is the thing, I am just taking you through that, some nuances, what kind of a thing, and why it is important kind of a thing. A survey was done in USA, and 100 people were given $10,000, and after 3 years they were checking what is the status. It's a $10,000 given for 3 years for 100 people. If you see out of that, 81 had nothing. They spent. Some of them they have borrowed money. 16 had increased that to 5 to 8%. And 3 increased it from $10,000 to $20,000 or $1 lakh or $2 lakh, they made it. Money making comes from your skill, it's a knowledge. Agree or not? So if you see these 3, 81 had nothing. That is just you are managing a normal money management. But 16 had increased from 10,000 to 5 to 8 is a nominal return you made it. But money multiplying is very, very important. Here, this is the case where you have to look at it, investment. So that is very important what I am trying to help you. Money management is the most difficult job. Most of you think that it is the easiest job. Have you ever come across KBC winner who successfully multiplied their wealth? By the way, KBC started when? You know KBC, Kaun Banega Karodpati? 2000? It's 25 years. 25 years. Have you ever, at least one single case where they got 1 crore that is multiplied into 7x, 10x? I heard this story. This guy won 5 crore in KBC and he has become a bankrupt, end of the day. So money management is a skill. Please understand what are the nuances. I am going to take you through that quickly. In money management as a pilot, as a pilot, what are the things you have to look at it? I am taking you through that quickly. See, these are the emotions when you are driving in the investment thing. Fear, greed, buy, sell, profit, loss, trading, investment. These are the things which I will take you through that one by one, what is kind of a thing. What is fear and greed? These are the nuances. You have to do PhD in this psychology kind of a thing. Not only money management, you have to do a managing money of your investors, you have to do a psychology also you have to study. That is PhD, you have to do it. For example, fear and greed, if you see in September 28, 2024, people were expecting market will touch 1 lakh. That is the greed people were created. At the same time, now if you see it is extremely fear. This fear and greed runs the market. And if you see, how many of you exactly invested on March 2020? How many of you exactly invested on March 2020? 1, 2, 3, 5, everybody invested. How many of you exactly exited on September 27, 2024? What is the relevance of these 2 dates? No matter how how smart you think, market will outsmart you every time. Please remember this, buy low, sell high. It is a small word, buy low, sell high, but it is executing is very, very tough. How many of you able to do in this room? Not even a single person. So that is what I'm saying, that this is very important. Look at these are the losses which market has down by 15-20%, various indices. Market lost 82 lakh crore in the market. So, but what is the loss this is? This is a notional loss. Most of your statement looks notional profit or notional loss. If it is a notional loss, if you cut down your loss today itself, it will become a permanent loss. But if you wait, markets will come back. If you see, loss is the biggest pain in this money management area. See, look at this chart. It shows you whenever it is a loss happens, if you are invested 1 lakh, market downs by 20%, it gives you big pain. And whenever market gives you a small return also, it's a small pleasure only you will get it out of overall kind of a thing. So money management, risk management is the most important element, and loss management is also to give a cushion to your portfolio. You need to ensure that the lowest losses and highest profit is the motto you should carry whenever you are doing it. And look at it, these are the recoveries in Indian market, this is the recovery in US markets. Look at it, how many years, 2 years, 3 years, within 2.5 years, market is reversing at any point of time. Historically, if you see 1956 to till date, in Indian markets also, it is coming back. But what is the end of the day, what is the outcome of it? The past declines look like an opportunity, the future declines look like a bearish kind of a thing. So these are the things which you need to look at it. When you drive a car, what you look at most? Rear view or windshield? Windshield mirror or rear view mirror? But when you are suggesting investments, what you look at it? Past performance only. So we look at it 2005 to 2015. We look at it all these things. But what you have to look at it? You have to look at it 2035, 2045. That is important rather than, because in a car driving, hardly you look at it 5 to 10% only. You look at the rear view mirror. Remaining 90% you have to look at it windshield mirror. Please understand, you are making investment today for the next 15 years, 20 years. Not 2015 investments you are making today. So look at it, windshield mirror, that makes a lot of difference over a period of time. And God has given front eyes. Why? Why God has not given back? All of us have front only, na? Look forward. In the investment also, these are Warren Buffett quotes. It is very simple quotes, but execution is very difficult. Buy low, sell high, all these things, whatever I am showing it. But this is a refreshment course to all of you. Nothing new in this. All of you know all these things. Just it is a NISM, every 3 years you go for a refreshments. I am making it a simple way. In this half an hour, I am just refreshing you, your time. That's it, nothing else. Nothing new in this. Look at, these are the crises, these are the events. Have you remember any of these events? Do you remember? You forgot all these events. Over a period of time, all these events gone to the books, history. So what you can control, the controllables. Look at, these are the areas where you can control. These are the outer or you cannot control. So markets, GDP, elections, inflation news, all these things are not in our control. So the remaining is your portfolio, your planning, trading, taxes, expenses. These are under your control. Look at these, control the controllables rather than not controllable. Most of the time this shows you focus on return, you focus on risk is very important. Margin of safety is very, very important. Suppose you are building a bridge which needs 10,000 capacity, 10,000 tons of weight it has to carry. What kind of a bridge you will build? What capacity bridge you will build? You exactly make 10,000 tons of capacity or more than that? So that is what important. In investments, whenever you are making, margin of safety is very important. You do just for the sake of asset allocation, you do it, but margin of safety where it is. I'll show you going forward what is important kind of a thing. So timing the market is hazardous. Look at it, last 2005 to 25 YTD, if you see, almost 20 years ka data I have taken. 10 lakhs invested in Nifty 50, entire period if you stay, it is 1.242 crores today with 14.1 percentage. If you miss best 5 days in the market, the return is coming down from 1.4 to 91 lakhs, 91 to 67 lakhs, best 10 days, 15 days, 20 days. Look at it. Just 10, 20, 30, hardly 1 month if you miss. Look at the drastic fall of your return. Look at this chart. What is this? S-Bank. All of you remember S-Bank? S-Bank fall, how it was happened. Before fall, there are 32 brokers have given buy call on S-Bank. 32 brokers. Not a single sell recommendation out of it. Don't take photos because please, just listen the concepts. That is very important rather than taking the photos. It doesn't useful for you anything anywhere. The point I'm making is timing and predicting the stock market is hazardous. That is what I want to show you in this picture. So nobody knows it what exactly kind of a thing. You are not an astrologer. Most of the people think that where market goes. Do you have answer? Even fund manager doesn't have answer. Don't be an astrologer. You are a financial planner. Be in the financial planning and asset allocation. That is your job. Not predicting the markets. Where it will go, it is not relevant for you. So these are the things. Be a goal keeper. Definition of investment tenures. Some people long term, short term. I was talking about it. Global investors, for short term it is 5 years. For medium term it is 5 to 10 years. Long term means 10 plus years. For Indian markets, if you see, for short term means you buy at 10 a.m. and you sell at 3 p.m. For medium term is BTST. Buy today and sell tomorrow. And for a long term it is a futures F&O settlement 1 month, 21 days, whatever the period. And for income tax purpose, it is hardly 1 year. This is long term. Long term means in investments is a PDC. It is a post-dated check. You are investing today. Please remember, long term is a series of short terms. It is not 1 year, 2 year. Long term means it is a decadal. 1, 2, 3 decades. Understand, it is not like that 1 day, 1 month. This is not the story of long term. Please understand, these are the things. How much you expect from MF investments? Generally, if anybody says that 12% return will make, 10 to 12%. What is your investor will expect? Every year 12%? Mutual funds will give you 12%, but not like this series. But it will give you like this. If you look at it, Nifty 50 last 10 years, the return average is 12%. But look at it how it has given. 2015 it has given minus 4.1, 2016 3, 27, 29. Like that it is giving you. So this return belongs to either last 2 years or it may belongs to next 2 years. Please remember this always. 1 year you may get lumpy returns, the another year you may get less returns. So whenever you are getting a bulky return means that belongs to next 2 years. So that is what happened. 2024 we got good returns. And today 25, we are getting that, averaging it for last year return also. Please explain this to your investors because this is the way markets behave and your mutual funds gives you the return long term. So if you look at it, last 34 years Sensex sheets, 44 years 34 years positive, 10 years negative. Calendar year wise returns, look at it, 0 to 20%, these many years positive, 20 to 40 years, these many years positive. Like this, it is divided into many years performance. 60 to 40, only 2008 it is market is fallen. Remaining all years, look at it, the 34 into 10. And this is the same case for US stock markets. 1951 to 2024, 74 years. Out of 74 years, 58 years is positive and 16 years is the negative. Are you with me? Am I boring? Thank you. US stock market this is the story. And look at it, stock market is like an ocean. Most of the people come for wetting their feet. And some of people will come for digging the oil, minerals kind of a thing. Those people only get the actual reward out of it. But if you are getting only just wetting your feet like 6%, 5% return, I think it is waste of your time, I'm telling you. Try to dig minerals out of it. That makes a lot of value for that. And look at it, this is my favorite chart. Last 10 years ka average also it is given CAGR. Look at it, these are how it is behaving segment wise. Large cap, mid cap. If you look at it, last 10 years average, mid cap has given highest return. Small cap has given highest return. What you are drawing by looking this chart? What are your takeaways from this chart? Cycles, next. Asset allocation, next. Sorry? Sector rotation, okay. See, most of the people look at the mid and small cap returns and they will jump into mid cap and small cap returns. Immediately they will invest here. But look at it, mid and small caps are not bad. I'm saying that if you are capable of digesting these kind of a falls, you should come into mid and small cap sectors. See, look at it, 2 years it is fall by 31-32%. But look at it, this is the case, but it came back very strongly in the next 2 years. Out of four years, can you see this kind of a up and down? Your investor is able to digest this. Then for them it is mid and small cap. 4 years, today we are living in a Maggie world. 5 minutes if I am hungry, I want to eat food. Not even Maggie world, I am saying that honking world. What is honking world? If you stand in front of a signal, if the guy is not moving, what you will do? Not even 1 minute patience we don't have. 4 years, how can you expect in investment world? Agree or not? So these are the things which I am trying to tell you. See, look at large cap with 13% return. I think without the drastic drawdowns are not there in large cap. So don't ignore large caps also in your portfolio. It will take care of your downfalls much better way kind of a thing. And look at it, most of the people think that stock markets, it's only fallen in 2025, it's fallen only 2020. Markets falls every year. You know, from peak to down, every year it will falls. Look at the chart, large cap, mid cap, small cap, every year you look at it. 10%, 16%, 9%, 10%. Markets every year fall. But we remember only the big falls. Understand? So this is the case, you have to look at it. Every year markets will fall 0 to 10, 20% sometimes. But this time the fall is little higher, 25%, 35% in some of the sectors also. But these are the things which you need to explain to your investors. And look at the sector rotation. Any AMC comes and gives you a buy call in sector. Have you ever heard any AMC is giving a sell call in sector? Of course, I am also AMC guy, but I am just telling you this truth. See, sectors are good. It will jack up your return in our portfolio. But entry and exit should be right time. If you see last year, so many sectoral funds came. What kind of experience you have given it to them? Minus 30, PSU. And what are the sectors you have seen last year? Defense sector, manufacturing, energy, media. What are the things happened? Minus 20, minus 30. What is the experience you are giving it to them? So right entry, right exit is required. If you don't know as a retail distributor, we don't know when to enter, when to exit. Give this money in a business cycle or some other sectorial funds. Let the fund manager take it. Don't take that headache. In investment, peace of mind is very important. If you are not able to get that peace of mind, even if you have 1 crore, 10 crores, there is no difference. How do you get that peace of mind? Delegate that work to expert. Let him handle that. So with my little knowledge, I am sharing these things. Look at it. These are the positive news are coming right now in the market. You need to share to your investors. That makes sense. Look at in the past, whatever the market falls happened, next 1 year, 2 year, 3 year returns have done well. Actually, this is the time you need to work double time. You know double time? In manufacturing industry, we used to hear that. This is the time you have to work day and night. Because if you are able to convince and get the investors now, in this fall, next 3 years you can give a good experience. But what happens generally when market is peak, we will get double, day and night we will work, we will get the investors, what kind of experience will be. Please understand this is the right times to look at it for long-term investors, staggered manner, these are the things you have to look at it. Some people ask me what is bottom today. Look at this. In the stock market, only two people knows the bottom. One is God and the another one is a liar. Agree or not? Nobody knows. Look at it, this chart is giving you two slides. This two are there. One is guy is saying, Morgan Stanley says is 1,05,000 Sensex by December. The other guy is a lake theory, he is telling that Indian markets will not give you any return for next 5 years. Who is God, who is liar, I don't know, time will tell. Understand, there are perspectives will be there are narrations will be there, they are seeing something else. But only the one thing is, you can't control all these things. What you can control the controllables. What is the pre-made crisis plan? What is the course of action if market falls from here? 10% market falls, what you will do? Sorry? Buy? Okay. Market falls by another 20% from here. Again buy? How much powder you will have? If market falls by 30%, market falls by 40%, market falls by 50% from here. Please understand, your course of action should not change because of market fall, unless you are not prepared well. Because how do you prepare for these kind of things happens? In the history it happened, COVID time, or we have seen 2008, market has fallen to these levels. But what is the case? How do you handle that kind of a scenario? See, there is no, you need not to change any plan if you do this plan. Understand? If you do this plan, you need not to worry about 10, 20, 30, 40, 50, irrespective of it. Understand? Pre-made crisis plan, what I call it as asset allocation plan. Understand, these are asset allocation. There are very famous models are there. Everybody follows different kind of models. I'm just showing you these are the models. Simple formula, I don't want anything. Every year 70-30, 70% you put it equity, 30% debt. Every year January 1st or whatever you like the date, and do real asset allocation. Understand? Or otherwise, if you don't want to do all these things, give that money to fund manager and he will do that. Don't try to time the market because you don't know 10, 20, 30, 40, 50% corrections, how to handle. Because you are managing public money, not your money. So these are the things, this is global level also, international strategy, how lifetime asset allocation strategy. They are allocating 0 to 10. These are the asset allocation models. Even Kalpen also tweets his portfolio. He is also diversified. He is also not influenced by any of these things. See, look at it. One important thing I want to tell you is, whenever you are suggesting, 5 minutes? Look at the strategy, suggest whatever the suggesting you are doing it. Please look at the ingredients are very, very important. Classic example, recently look at it, balance advantages are fallen 25% to 15. Look at the fall. Balance advantage funds. People are giving money for you to manage the balance advantage funds to lower down your falls. But what is happening in the market? So look at, these are the signs of excessive and extremism returns wherever markets are signs, top signs and bottom signs you can see here. And equity investors will pass through, these are the very, very important things. No returns, below returns, at par returns and super returns are nobody can escape all these four, has to go through that. And look at, this chart gives you falling markets, SIPs especially, don't stop it. Because in this room, everybody wants to pray the God, market should go up. In this room, I am the only person who will always pray the God, market should fall. Because I am a SIP investor, whenever market falls, I'll get more units. And nobody can escape. Because one day God also listen all the 99 people in this room. So a few things, these are the things, SIP average cost. These are my DSP funds, last 15 years, 20 years there in the industry. Look at current NAVs are this. Can you imagine if somebody invested 10,000 rupees 7th of every month, market is giving you this kind of a return. Can you guess what could be the average cost of per unit in these funds? Can you wild guess, suppose for I say equity opportunities, current NAV is 545. What is the average cost per unit in this fund? Sorry? The NAV is 545, your average cost per unit is 36 rupees. And this is 24 years in the fund. And 10,000 invested, 29 lakh 80,000 is your investment, 4 lakh 47,000 is your today's value. Just 36 rupees average cost. That is beauty of rupee cost averaging. And don't change the lanes. Changing lanes are very dangerous. Construction of right portfolio, trial and errors, it takes years, kind of a thing. And power of compounding. Can you guess this is $20,000 if I give you, and 10,000 rupees, $10,000 you have invested, which is giving you 26% compounding. Another 10,000 if I give you 26% negative compounding. What will be your, after 10 years, what could be your investment value? 0? Because 50% is giving you 26% compounding, the another 50% is giving you minus 26% compounding. What will come outcome? 0? It's not the case. If you see 17% is the CAGR it is giving you. Look at it. This compounding 26%, $10,000 is taking you this much, minus 26 is taking this much. Total CAGR is 17.76%. That is power of compounding. Those who understands, they will earn it. Those who doesn't understand, they'll pay it. So these are the things. 1 crore, first 1 crore is very difficult to reach 2 crores. It takes 6 years. But 1 crore to 10 crores, it takes just, look at it, 9 to 10 crores, just 1 year. This is power of compounding kind of a thing. How much return you will make? Kitna banega? How much return you will make if I invest in mutual funds? This is the question everybody will ask me. Look at it. If somebody is investing 30 years, 1 rupee you are investing, it is becoming 39 rupees in 30 years because of 13% compounding if I take. The 30 years, 39% is the return you are getting it. What is the real return you will get it? If you are churning this every 3 years, if you are redeeming it, what will happen today? Thirumala Sitharaman will take 12.5% out of it. If you see, your return will come down drastically every 3 years if you are taking out and churning your portfolio. Your return from 39 rupees minus 25, 1/4 of return will come down to 29 rupees. Understand, it's a power of 30 years made. You are losing 25% only for taxes. And this is today's rate. Tomorrow it goes to 20%. Nobody can tell you that. That will go down drastically kind of a thing. 2 minutes, sir. Returns over long term, fixed deposit will give you inflation plus 1 or 2%. Gold will give you 1 plus 2%. Real estate will give you 3 plus 4%. Equity will give you. Look at it, rolling returns last 10 years. All these are given similar kind of a things. At any point of time you invest also. This is DSP last 10 years. So since inception 1 lakh invested, how much it has created wealth. And investment grows like your children. No children will become a professional overnight. If you look at it, in our DSP Flexi Cap, which is the longest one, 27 years, we have 4.52 lakh investors. Can you guess how many investors are there since inception to till date? 5? All of you say that long term, na? Look at it, in this fund only 23 investors are there. Fidelity has done a research 2003 to 2013. How many people made money? The people made money either not there on this earth or they forgot their investments. So that is long term. Look at it, Kalpen says that, this is Kalpen's words, it states that it takes 20 years to build wealth, but it takes 25 years to know it takes 20 years to build the wealth. So this is the power of long term, and you don't understand because you are trying for 5-6%. You are just wetting your feet and not digging the minerals kind of a thing. Look at the power of SIP. These are the investments, 27 years, how it has created wealth. So these are the things, and over a period of time, compounding goes like this. Your investment, the blue lines are your earnings. Sometimes after 10 years, your contributions, maybe the earnings will go up. So that is power of market. Please believe in market and look at it SWP, how it works. I worked in Kerala, I show this thing. Your investment is just like a coconut tree. Coconut tree gives you 2 things. One, inflation, it will teaches you how coconut prices goes up 10 rupees to 20, 20 to 30. In Bangalore, it is 60 rupees now. And not only that, if you look at it, do you know coconut tree, how many years it will start giving the yield, the first coconut? 3 years? It takes 6 years. It will not give you a single coconut, it takes 6 years. After that, it will give you for 100 years. That is stock market. First 6 years, you may get meager returns, but after that, it will give you your lifelong returns. So these are the things. So what I spoke to you is a long term means series of short terms. Don't cut your short terms, and it means decades. It is a PDC check I spoke about. You should make money through contrarian view, or you should have a discipline to make money. Risk is inevitable. Only way to make is risk asset allocation. And doing mistake is not wrong, but doing repeated mistake is wrong. Your learnings, you should not ask for success stories. You ask for the regrets. From there you can learn a lot of things, kind of a thing. So this is the end of the story. What I'm talking about is money management is a skill. Money maintaining is a discipline. Money multiplying is an art. So all of you, over to you. And thank you very much. Look at these are the things. Thank you very much.